Folks, Dan Frio here, the rate update. Today is September 16th, 2021. Economic news is coming out. The better the economic news, the worse rates are going to get. Just throwing that out there. So when you come back, we're going to go over what happened today and why. So don't go away. We'll be right back. Okay, so about 1,000 people watch my morning videos so far, so thanks to you guys out there for watching. If you find value in this, please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. So what's going on today? Well, the unemployment numbers came in kind of a little mixed, but they're getting better. That's the good news there. On the economic front, the retail sales number came in, and they're crazy off the charts. And I don't know if it's a blip in the radar or what, because the number seems way too high. So there was a knee-jerk reaction in the market today. I'm going to hold. I told you guys, I'd post again at the end of the day, and MBS has even went worse than where we were. But again, I'm sitting on the sideline. I'm not locking you guys in because I'm almost positive we're going to have a rebound. So let me recap all this to make it make sense to you. So let's get to it. The headline news today is this. Mortgage demand for homebuyers jumps to the highest level since April after new listings rise. I posted that yesterday, but another reason why I wanted to post that again today is right here. You can see even as interest rates tread water, the housing market could get a second wind, and it's showing its resilience right down in this area here. I know it's blued, but hopefully you can read that. The number of new listings on the market increased 2% over the past week. Let's just stop there. 2% over the last week. That's a huge number, guys. And that's where I really want to leave it and focus in on. I keep saying, you can't go back and say, up until this point, there has been no houses on the market or whatever. Why is this all happening? And I've been trying to pull the curtain back on all this that a lot of financial people aren't telling you guys. Why are there no homes on the market? And again, it's the forbearance. It's the all kind of other things. People aren't buying houses because lumber prices went up tenfold, and people just started getting frustrated. And they're like, you know what? I'll just rent another year. I'm looking at 2022 as probably being one of the best years to buy a house in a long time. But what I want to talk about, though, is the clip that we just went over. There's 2% increase in homes on the market in the last week. Okay, why? And I keep telling you guys, I'm saying this, in the next 90 days, we're probably going to see about 500 to 800,000 houses come on the market. I'm just showing you where my data is coming from, and that is starting to come true. There's more and more homes on the market. So that's the first highlight I want to give you guys. So don't freak out. There are houses coming on the market. So let's get back into it. The news that came out today was basically economic news that I didn't really think would shock the market. There was one piece of this puzzle that I was really concerned about, but there was another piece that I wasn't. And let me go through this and tell you what my thoughts were. Going into it, I figured jobless claims, they're going to start to retract. Why? Is because the excess stimulus is coming out of the system. So it's going to take time for people to use some excess funds and really get forced back in the workforce, interviewing and all this other stuff, because a lot of people procrastinate. So do I. Everybody asked me, Dan, can you post this earlier? Well, I procrastinate all the way till 4 o'clock, and then I do it each day. So I even procrastinate. But the area that I didn't think would really show much, boomp or oompa in is retail sales. Look at retail sales month after month. They expected it to retract by 0.8. I think it's way too soon for that, because all of this stimulus stuff is just ending. And here's what I mean by the stimulus stuff. Okay, and again, I apologize, I'm beating a dead horse, but if you're not paying a mortgage payment because of the forbearance agreement, you're not paying on student loans, and you're still making as much money as you always have, you're not going to put up your house for sale, and you're spending a lot because you have a lot of excess funds. The video I posted this morning was Becky Quick from CNBC. She said, consumers are flushed. What she means by flushed is a lot of people in the nation right now have a lot of excess money because they took advantage of a lot of these programs and maybe didn't need it. you might have never missed a day of work, but you got the stimulus check. You were able to forbear your student loans. You were able to forbear your mortgage payments. You were working still, and you got excess stimulus in the tune of, I knew people that got up to $10,000 in stimulus money, and they didn't really miss a day of work. So again, I know on the other side of the coin, there's a lot of people struggling out there, but conversely, the JOLT index, and I know I say this also, the JOLT index comes out once a month and it tells us how many jobs are open. There's a record number of job openings right now, 10.9 million job openings, more ever than in history. And the argument of all those are low-paying jobs just doesn't cut mustard, guys. There's a lot of jobs out there. So if you're in need of a job, please keep looking because they're out there for you. But let's get back on to the topic here. So retail sales is robust. Well, all these stimulus programs just ended. It didn't mean people just stopped buying overnight. They continued to buy. This is going to start coming down. Trust me on this. So these numbers had a complete knee-jerk reaction in the market today. I think that's going to subside because there's no way that we move this much in basically 2 days. So let me go through the numbers. This is what's happening to the mortgage-backed security bond on Wall Street. This is the biggest component of your mortgage rate. Okay, when this number goes down, that means mortgage rates go up. There's an inverse correlation. The lower amount that you pay for a bond, the higher the yield. In this case, if it's a mortgage bond, the lower the price, the higher the mortgage rate. If this number goes green, it means the prices are higher, means your mortgage rate comes down. Look at this change in the last 2 days. Does this look similar to maybe this? Okay, I don't think we're going to feed all the way through this because there's no really need to this. The Fed hasn't come out and said they're going to start tapering or anything. So I think, by tomorrow, maybe by Monday, we should be back up into this range, starting to hit the 100-day or 50-day moving average, which is right in this range, and eventually moving into the 25-day moving average, which is all the way up. If I condense this out, where's that line go? Right about there. Well, a little bit above 104. But I'm predicting we'll get to the 101.2 or the 101.4 in this number right here. I know I'm not throwing a lot of numbers at you. Just look at it this way. We're at 101.02. 2 days ago, we were at 101.38. Huge drop. And we're going to recover that. I anticipate us recovering some of that in the next, between Friday and Monday. So stay tuned for that. But the economic news that came out today, we went through some of that, but the initial jobless claims was a little bit of a shocker. It was up from where we were last month, and it was up higher than the consensus. And that kind of is a little bit strange, but these always get modified. So I wouldn't be surprised if this got modified and downgraded. Okay, that's that part of it. The continued jobless claims, people are starting to come off of this. Look at this. Last month, we had previous 2.8 million continued jobless claims. We got 2.6 right now. Okay, that's a lot of people back to work there. I don't know why there's a lot of initial claims. There might be something here, and I'll look into that. But when we start seeing continued claims dropping by 200,000, that is great signs. Great signs for the economy, not great signs for interest rates. Not great sign for mortgage rates. So that's where we are right there. Yesterday, I didn't have the rates by the time I posted. I did get them today, but first thing, let's see what happened to the market. We opened the gates and plummeted, and then we stabilized. Which I like is basically look at the low for the day right here. That's where we stayed almost all day. The good news is we have a lot of green at the end of the day. That's telling me we have more buyers in the market than sellers. So if this rolls into tomorrow this way, we're probably going to see an uptick. There's no economic news coming out tomorrow that should play any havoc in really anything. So that's that part of it. So what's going on with rates today? We'll go over to Black Knight. Black Knight posts rates all over the country. They surveyed lenders all over the country, and this is the average rates throughout the country. Now, guys, if you locked in, 2-3 days ago or weeks ago or whatever, and your rate is higher than this or lower than this, there's probably a reason. To get my rates, all I do is ask you to call us or apply or do a Zoom meeting with us or whatever. Then I can give you your customized rates. Just because this rate posts, 30-year fixed rates 303, doesn't mean you're going to get 303. If your credit scores are lower and you're pulling out cash and you live in a 4-unit building, I can guarantee your rate might be closer to 4. Okay, so there's a lot of adjustments when it comes to your rates. Maybe tomorrow I'll do a detail of that on what all goes into this rate, okay, to explain to you guys how rates work and how you can get a rate at maybe 2.99, and then just a little few tweaks to that loan could take your rate up to almost 4%, and how that all works. So I'll go over that tomorrow with you guys too, so you can understand that. But what Black Knight does is they put out this every day. These are not my rates. So these are 30-year rates for the conforming jumbo FHA and VA. They're right here. The 1-day Delta, 7-day Delta, and 4-week Delta are here. Okay, this is hard to believe because yesterday we had a big decline in MBSs, and we also saw a big decline today. So tomorrow this number should be up. There might be a little bit behind the curve on this. Let's see what date they posted this, or what date the data is. The 15th. Oh, this is yesterday's. These are yesterday's numbers. So these numbers right here are representative of before these two moves took place. So we were at a 101.38. Now we're at a 101.202. That's probably about 10 basis points or 12 basis points in the rate. So I wouldn't be surprised tomorrow if we saw these rates go up about 0.08 or something like that. So let me explain what I'm talking about here, because I'm rambling. I know I am. 1 basis point. What is 1 basis point? It equates out to 0.01. The parentheses mean it went down. 1-day Delta, 7-day Delta, 4-week Delta means change. So 1-day change, a 7-day change, and a 4-week change. You can see that yesterday we're down 1 basis point than where we were the day before. That means yesterday we were at 3.04. Now today we're at 3.03. Okay, so that's where rates are today. And that is it for today. Tomorrow I'll go over and explain rates to you guys so you get it. But if you're out there and you're looking for a mortgage, please give me a shot. Okay, if you already got an approval or you got a loan estimate from another company, please send it over to me. What I do is I write all over that thing in a different color marker, and I send it back to you with a quote that I can provide you. Sometimes I win, sometimes I don't. Please be careful. Some of the companies, they might offer you fantastic rates, but never answer the phone, and they're not there for you. They're not there in the evenings for you. They're not there on weekends for you. They're not there to assist you with why that program. Can we help you with your credit scores and everything? I want to be your mortgage consultant. I don't want to be just a click through, you get it done and you're done. I would love to interact with you guys and help you, explain the process, put you in the right program. Maybe we can help you increase your credit scores and everything. That's what we can do for you. If you're out there and looking to buy a house, let us help you get pre-approved. Let us help you get associated with a realtor in your area that you're looking for, who's a professional full-time person. You might need help with an attorney. We got them here. We can refer those to you. We can be your one-stop shop for that. If you're in a forbearance, I'm not hearing from you guys. Please refer this or share this video with anybody that you know, family, friends, neighbors. If you're in a forbearance, please reach out to us. We can help you with an exit strategy. So that's all for today. Tomorrow, again, we're going to go over how mortgage rates work. Why did your neighbor get 2.5 and you're getting 3.5? There's a reason for it. Okay, you're not getting ripped off. Sometimes you are, but basically there are different criterias and different adjustments in your rates. So that's it for today, guys. Thank you so much for watching. God bless. And if you're a realtor out there, reach out to us. We're looking for preferred partners all over the country. Good night, guys. See you tomorrow.